Good morning, everyone. Well, the dollar is mixed once again. It's gaining against the stocky, the New Zealand dollar, and the pound, but it's declining against 5 of the other G10 currencies. It's basically unchanged against the euro. The biggest decline is against the yen, as might be expected, with not only Tokyo stocks but also Asian stock markets down uniformly. Dollar-yen tends to move in line with stock markets. But the Aussie and Canadian dollars also gain against the US currency too, so it indicates that it's really just more than just risk off. However, the dollar was starting to turn up again in early European trading after US lawmakers reached agreement on a budget deal for the next 2 years. That eliminates the risk of another government shutdown next month and so removes some of the risk premium from the dollar. The elimination of fiscal risk should also make it easier for the Fed to begin tapering off its monthly bond purchases, although that seems to be pretty well discounted by the market already, as I've discussed previously. As the Fed funds futures remained steady and U.S. bond yields eased further yesterday, the dollar is getting no more interest rate support. On the other hand, European banks are repaying their LTR funds and moving into the market for funding in preparation for the asset quality review. So 3-month Euribor continues to fix higher. It hit a 12-month high of 0.26% last night, slightly above the comparable dollar rate. That makes it possible to put on euro-dollar carry trades, which I think is one of the things weakening the dollar. The reluctance of the ECB to take any further action to improve liquidity last week is only increasing the pressure, which comes at a particularly unfortunate time as we move into year-end, when there'd be pressure anyway. The pressure on short-end euro rates is likely to remain at least until the year-end and may well support the euro until that hurdle is over. As the combination of rising rates and a stronger euro is harmful to the eurozone economy, particularly with the periphery, I'd expect to see the ECB take some action eventually, if nothing else than verbal intervention by ECB council members. We have to listen closely to what they say about the supply of liquidity. There are no major indicators out during the European trading time today. Overnight, the Reserve Bank of New Zealand meets. It's widely expected by just about everybody that the bank will, in fact, I think by everybody, that the bank will keep its rate unchanged at 2.5%. So the focus is going to be on RBNZ Governor Wheeler's press conference after the decision, and particularly what he says about the currency. Probably he'll say once again that it's too high, which is why the New Zealand dollar is lower this morning and may well continue to ease up into the meeting. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.